And another warning about the state of the Chinese economy from Premier Wen Jiabao. On the same day, the nation raises fuel prices for a fifth time this year. Bloomberg Stephen Angle is on top of the story. Steve?
Yeah, Haslinda, Premier Wen, speaking with visiting World Bank President Robert Zoellick, said that the Chinese economy is at a critical phase and said that the government will not change the direction of economic policies. Next week, we will get a slew of August economic data out of China that should give us a pretty good indication of the direction the Chinese economy is indeed heading. We'll get trade numbers, fixed asset urban investment, industrial production, retail sales, money supply, PPI, CPI, you name it, all coming up next week. Yesterday, the PMI, the Purchasers Managers Index for August, came in stronger than expected, the highest reading in 16 months as record lending fueled production at factories. But will that last, as lending is expected to ease in the second half of this year? And now China has raised fuel prices for a fourth time this year under a new pricing system that was introduced in December to let domestic oil prices better reflect the international price of crude. Before then, authorities had kept prices pretty much capped even when crude prices had soared and refiners' profitability suffered, namely Sinopec, which supplies about 3/4 or up to 80% of all China's gas and diesel needs. China's three previous increases this year raised the price of fuel by as much as 25% in total, as crude oil has doubled since reaching a low back in February. Easing inflation and a rebound in GDP here in China after 2 years of progressively slower expansion have given the government room to increase those fuel prices. Consumer prices in China falling 1.8% in July, so we're in a deflationary environment still here. That was the biggest drop since 1999, even as the economy grew 7.9%, better than expected in the second quarter. Inflation figures for August are due September 11th next week, and barring any major surprises, the deflationary environment is expected to have remained. Hence, the government feels, Haslinda, it has room to raise those fuel prices. China will raise gas prices starting today by 4.6%, diesel by 5.2%, and jet kerosene by 6.33%, as I said, starting today to help those refiners offset higher raw material prices. Sinopec and PetroChina shares are rising in Shanghai as I speak. There are 8 shares, actually, though, well, they're a bit mixed. Sinopec down in Shanghai, up in Hong Kong. PetroChina up in Shanghai, down in Hong Kong. Go figure. Back over to you.
Hey, I'm wondering, what's the sentiment on the ground about those increase in prices? Fourth one, more to come.
Yeah, well, I can definitely tell you what Sinopec is saying. A couple weeks ago, August 24th, I believe it was, Sinopec actually said it would suffer a refining loss this month if the government did not raise prices. Of course, nobody on the street, Haslinda, wants higher fuel costs. I mean, it's bad enough sitting in all the traffic with, you know, a 70% jump in new car sales in China last year, or last month, or July, actually, alone. So a lot of cars coming on the street. No one wants higher fuel prices. But again, if, you know, the refiners have to pay those higher crude prices, it's got to be passed on to somebody. And those that drive, they got to pay.
I know. Drivers out there, beware. Thank you so much for that, Steve.